Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Today, we have John Netto with us. John Netto will be talking about FX option strategies for a declining volatility environment, and that's what we're in. We've been there for the last 6 months or so. John is the president of One Shot, One Kill Trading. He's the author of One Shot, One Kill Trading. He's precision trading through the use of technical analysis. Along with being a professional trader and author, John actively consults in alternative investment space for buy-side firms, sell-side firms, and technology providers. He takes an active role in helping emerging managers, CTAs, and proprietary traders grow and expand their business to the next level. Really pleased that we have John with us today. John, welcome. Thanks again for joining the ISE.
Can I get a what? New York and the USA, baby.
Good to have you. Really looking forward to this presentation. You know, what's interesting is that you agreed to do this, 6, 8, 10, 12 weeks ago, and you said, how about this, Steve? Lower volatilities. I said, sure, John, and sure enough, as we talk today, whatever it was, 10, 12 weeks later, we are probably at the lowest volatility we've seen this year. Isn't that sort of ironic?
It's ironic, but there are some seasonal factors that definitely step in and take a part of that. You know, when you look at sort of how the market historically goes, and again, like we're here to talk about, and obviously over the course of the presentation we'll touch on this in further detail, but you look to talk about, you know, volatility in terms of like when certain markets exhibit certain tendencies and patterns, and really the theme for the last 12 to 18 months has been that of risk appetite versus that of risk aversion. And so when we try to understand, you know, a higher volatility environment, what does that embody and symbolize? Now, I think that takes into account things like, you know, both from an emerging market standpoint, from a domestic market standpoint, and from a currency standpoint, you kind of fall into two categories: the haves, the have-nots, the do's, or the don'ts, the risk averse, or the risk appetite. And so currencies, in many ways, reflect that same dynamic as well. And so as risk aversion has dissipated or has come off, you know, rather substantially since last fall and the early part of this year, we've seen the greater risk appetite. And it's funny because volatility itself embodies that whole dynamic as well. You know, a rising volatility market sort of takes on more of a risk averse approach, whereas a falling volatility market can, in many cases, at least I think within the context of the last year's price action, take on a component of risk appetite. So, you know, with that said, I look forward to getting into this presentation, and I'll discuss some of the things that we look to do. First of all, as you guys can see from the slide here, when trading, you know, ICE FX options, obviously options involve risk, and it's important as traders we make ourselves cognizant of that. I also want to let everyone know in advance. I listen to a service, a news squawk, so you may hear something pop up. We're right in the throes of earnings season right now. And it's just interesting to see that even within, you know, domestic earnings, obviously with Goldman, Google, Intel, Bank of America coming out on Friday, that those ultimately still serve as a linchpin or as an understanding for where that risk appetite or where that risk aversion mentality or sentiment is shifting. So with all that said, there's a lot going on here. I'm first and foremost a trader, everyone. So I'm looking to, you know, I'll share with you guys as much information, as knowledge as I have. I think that I've been very blessed to be in the situation that I'm in, and I have a lot of passion, a lot of enthusiasm for what I do, and I love this industry. I love this business. So hopefully you guys find some value in today's presentation, and as you see throughout in terms of my contact information, if you have any questions about the markets, in terms of, you know, I like talking to traders. You know, I live here in Las Vegas, Nevada, get a chance to travel around the country, and so definitely here in Las Vegas there's an appreciation for the art of speculation, and when the markets aren't going, I find myself at the Bellagio or at the Hilton Sportsbook. Looking through some of the components that we'll be talking about today, and what we reference, for those of you that are currency traders out there that are maybe not as familiar with the ICE FX options, it's good to maybe understand some of the nomenclature and protocol that's available. And as you see from the Aussie dollar to the British pound, there's quite a nice array here of the currency makeup that the ICE offers and allows you to take on exposure through the underlying options. As Steve touched on briefly, and Steve is of course extremely knowledgeable and can answer even the most esoteric questions about the ICE FX options. They serve as, in my opinion, a practical way to take on or effectuate exposure based on that risk appetite or risk dynamic that I was alluding to at the onset of this presentation. Something that, when I speak live, I like to get a feel for in terms of sort of how many people trade just the underlying FX market itself. With all the different, structured products and vehicles out there and derivatives out there, there's a lot of ways to take on that exposure. It could be through an ETF, it could be through the futures, it could be through the spot forex, it could be through the options on those respective contracts as well. I'm just kind of curious if I can get some participation here, if people can type in just, if they currently trade FX now, they currently trade options. If you guys can take a minute or two just to kind of type that in, I'd appreciate that immensely. I see the spoos are popping here after the bell.
Are they? Yeah.
Yeah, we're up at 909, 8 half.
Wow.
Or 3/4. So that looks like they like what they got out of Intel. Intel, the revenues were a little bit higher, so we'll see if that carries over to the Asian market and what's been interesting the last year. And again, I'm a very free-flowing presenter, guys. So I kind of like to look at the market out of structure for the class, but at the very same, I mean, we're all traders, and there is a certain fluidity to what we do. And if I see something pop up or I think of an idea or whatnot, I'll gladly share that with the rest of the class during this presentation. So basically, everyone buckle up. The class objective today, amongst other things, is to provide an introduction to the concepts and strategies of trading high and low volatility. High volatility markets, for me as a trader, I'm a big energy guy. They're definitely a lot sexier. But low volatility markets can provide some opportunities as well to extract some decent alpha, obviously if things work out and go in your favor. Also want to talk about incorporating new ideas on ICE FX options to trade in a declining volatility environment. And it's not to say that this volatility will continue declining. Maybe what's more important, or just as important, is that you sort of have a playbook or a game plan, or at least conceptually anyway, of what you might like to do with the environment being the way it is. And of course, like I've talked about so far, offer ideas and strategies for the current market environment and go from there. So those are the three class objectives: provide an introduction, incorporate new ideas, and then really go over the strategies for the current market, where I'm going to dig up and throw my charts up and just give a real-time assessment of where I think things are going and how we might play them. And I think that practical application is the best way to ingrain new concepts and provide some realism to the whole exercise or process. Spoos at highs right now as we continue to talk. 09 half, 09 3/4.
Wow.
Okay. A little bit of my background. As Steve mentioned earlier, I'm an author of the book One Shot, One Kill Trading. First and foremost, I'm a trader, and just talking about the markets and sharing what I do in the markets is something that I enjoy very much. And when One Shot, One Kill Trading, spending 9 years in the Marine Corps and taking that background and taking that base, have really tried to apply that discipline and that focus and that harmony and that on top of a trading style. And something that the Marines are known for and that I tried to gain and continually work to refine is a certain fluidity and a certain, we say, our motto is Semper Fidelis, which means always faithful, but you often hear when you're out in the field a Semper Gumby, or always be flexible, because situations change and you may be the Lance Corporal, who may be the fire team leader. Next thing you know, you're leading a platoon based on what's taking place. So having that flexibility, having that fluidity, being aware of the dynamics of both, life in the Marine Corps and life in the market is important to being successful. Launching very shortly a thing called Sniper Squawk live trading service. We'll come out with a date on that, but definitely it's really going to put together just a squawk line with traders and like Steve mentioned earlier, serve as a consultant for buy-side, sell-side technology firms. I've spoken not only with the ISE but a number of other exchanges as well to a range and host of audiences, is to the top institutional people, to prop firms in Chicago, to retail conferences like the Money Show. So basically the entire spectrum of investors, from the very beginning trader to the 20-year seasoned person, and always look to advise and consult and collaborate, and it's with that mindset that I'm talking today.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.